All right, welcome back to Power Lunch. I'm Dominic Chu. Fed Chair Jerome Powell was upfront yesterday about the two-sided risks of weaker employment and firmer inflationary threats still remaining, saying that there is no risk-free path ahead. But that does not mean that you can't manage your risk overall in your portfolio. So when it comes to money, where are the best opportunities in the market? Our next guest has some ideas. Today's market navigator is Brian Stutland, Chief Investment Officer at Equity Armor Investments. Now, Brian, the two-sided risks are that inflationary threat and a softening jobs market at the same time. One is at odds with the other with regard to lowering interest rates. What exactly can you do with your investments to make sure that you are best positioned for the risk and reward?
Yeah, I mean, it looks like we're just in a world where we're going to have slightly higher inflation. That's going to come, but hopefully we get bigger growth rates, right? And we get expansion in the economy. And for that, I want to be out of bonds. Bonds are not really providing the kind of value or the hedge in a portfolio or diversification. And so I'm looking at stocks, I'm looking at commodities, and that's kind of how I want to play it. I might use options to do so, but certainly it's the stock market that's probably going to go higher. We've heard people say, don't fight the Fed. And it seems like that's the case, at least today and probably for the rest of the quarter.
All right, so, Brian, where are the tailwinds going to be the most profound? Which parts of the stock market are you looking at?
Yeah, I mean, I think when we look at a lower interest rate environment, especially on the short end of it, it's really technology that's done it. And, I mean, you've had guests on here talking about AI and tech, and those are going to be the guys that lead it. The question is who? We have the base sort of the large language models in place. I think the next level are the guys like Oracle, Palantir, the ones that are sort of building the agents out, building productivity in corporate America.
And just one quick follow-up, how do you do it? With options or buying the stock outright?
Yeah, I think like names like Oracle or Palantir, I might look to buy a 3 to 6 month dated call. I might finance that by selling a downside put because I think the downside is somewhat limited on some of these names, and that's how I kind of reduce my cost. But I'm going to use calls. The VIX is cheap. Volatility is kind of cheap. There's a lot of, basically good feel in the market right now, and I use call options to sort of express the upside in the market.
All right, Brian Stutland with the post-Fed playbook there for technology. Thank you very much, Brian. I'll send things back over to you.